Hey, welcome back, Market Rebels, and happy Thursday, everyone. Looks like we had a little bit of a sell-off in the SPY going into the close. I think we were down about 0.8. We had a nice little gap on the opening bell. Futures were up. A lot of that, at least from the only economic indicator that we had, was the jobless claims, which fell by 12,000 to 214,000 for mid-October, giving it about a 3-week low. So it seems like a lot of that is starting to recover, and especially after Hurricane Ian, but still not out of the weeds yet. But we do have more volatility, and that's a lot of what trading tune-up is about, how you can make better decisions by understanding strategies and different aspects of the market to set up your trades. So for today, what I wanted to do was a little bit of an introductory class, and this is on how to read candlesticks. And the reason I wanted to do this is I think going forward, I want to start introducing some of the more well-known type of candlestick patterns, the reversal patterns, and we'll talk about some of the one candle, two candle, and three candle patterns, what they mean, and I will probably bring them up at significant points in the market, such as when they occur. So if we get a major bullish engulfing or a bearish engulfing or something, that's probably when I will bring these presentations up. But I wanted to right now at least show many of you how to read a candlestick chart. I know a lot of people think that they know, but they don't really understand all of the ins and outs. And then at the end, I'm going to show you a couple of mistakes that traders make. So let's start with how to read a candlestick. So the candlestick shows the open, high, low, close for a given period of time. So if you have a day chart, if you have your time frame for your chart set to 1 day, it means that each candle shows the open, high, low, close for that trading day. If you have your chart set to a week, it is showing you the open, high, low, close for the week. What was the open on Monday? What was the close on Friday? What was the high and the low throughout the week, regardless of where it occurred? That's what each candle will show you. If you're on a 5-minute chart, you're looking at the open, high, low, close over the past 5 minutes. Now, of course, we don't usually call that a close, but it would be the last trade at the end of that 5-minute period. And so that's just what each candle is showing you. So let's take a look at how these candles are formed. Let's say that our stock is at 100, and this is the opening price. If you were to draw one by hand, you would simply draw a little hash mark right there for the opening, whatever that opening number is. And then, of course, you're going to have a closing number. Let's say it's down here at 98. We would draw another little hash mark, label that the close. Now, if the markets are still open, this would be the current price. So maybe it's 3:30. It's 30 minutes before close, and the stock's trading at 98. That would be the bottom of our candle right there at that moment in time. So it's either going to show the closing price or the current price. Now, during the day, we're going to have some highs and lows. So what we're going to do is we're going to box in the open and the close, and that's what creates our candle body. And because in this case we have the close below the open, all right, the close is lower than the open, we're going to shade that candle in red. Now, of course, as I mentioned, we're going to have some highs and lows. We're just going to draw a little stick or a shadow pointing to the highest trade. So let's say the highest trade was at 101. We're just going to line up the top of that stick right there to 101. We're going to do the same thing down here at the bottom. Let's say the low was down here at 97. Now, these little shadows, or these little sticks that I just alluded to on the top and the bottom, are actually called shadows. And in today's world, you hear a lot of people referring to them as wicks, which I think makes a whole lot more sense. But just in case, most of your books and websites are still going to refer to them as shadows. That's what they're talking about. This rectangular portion is called the body or the stick, the candlestick. And again, it's just showing us the relation between the open and the close. Now, what would happen if we had our open and closed reversed? Okay, so let's say we have the same high and the same low, but we opened at this price. We opened at 98 and closed at 100. What happens now? Now the close is above the open, and so we're just going to shade the candle in green. So that's all a green candle shows you is that the closing price from today, or whatever time period you happen to be in, is higher than the opening price. a red candle shows that the closing price is below. So it gives you a very nice visual to see if we close above or below the open. Now, one thing that a lot of traders get confused is when they're looking at two candles like this. Notice that we could have the same high and the same low. Candles look exactly the same, one's red and green. But the difference is that the open and the closes are going to be on the diagonals. See, for the green candle, the close is going to be at the top. For the red candle, it's at the bottom. For the green candle, the open is at the bottom. For the red candle, it's at the top. So they actually lie on opposite corners. So that's something you just have to kind of work with, is to, when you look at this and say, well, it's a green candle, what does that tell you? The close must have been above the open, and therefore I know the top of this box or of this body must be the close and the bottom must be the open. If you see a red candle, you should think, close is below the open. That's why it's red, and therefore the bottom of this candle must be the close and the top must be the open. So what's one real big advantage of looking at candlesticks? Well, typically here in the US, we have what's called a Western bar chart, and they look something like this. So we get these little hash marks. We have the open if the hash mark is to the left, and we put a little hash mark to the right if that's the close. If we have this type of a candle, notice that the open is over here on the left at this trade, and the close is down here. But it's not as easy because they're not color-coded. You have to kind of go through this in your head and say, well, let's see, the close was above the open. That was kind of an update. Now, some of the more advanced platforms, some of the newer platforms will color-code these. So they would make this stick on the left as green and this one on the right as red. But not all of them do that. A lot of them show this as black and white. And so you can see that this candle on the left shows exactly the same information as this Western bar chart on the right. Not real easy to tell. And especially if you got a lot of bars, it becomes really hard to see these little hash marks. Very easy to see the coloration of those candles. This candle on the right, the red candle, shows exactly the same information as this Western bar chart on the right. All right, so that's really all that a candle shows. Now, what candles don't show? What they don't show is what happened during the day. So if you see a high price at 110, you don't know if that happened off the opening bell, if it was closer to the close, if it was midday. You simply don't know unless you look at an intraday chart. So they don't show the price action during the day. The key to understand is that if you have the same open, high, low, close, you will get identical candles. So there's technically an infinite number of different combinations that could produce the same candles. So again, you don't really know exactly what happened during the day just by looking at the candle. So for example, take a look at the candle on the right. We have a certain open, close, we have a high and a low. How could that candle have gotten formed? Well, maybe the stock started up here at 100, hit this low at 97, hit this high at 101 later in the day, and then closed down here at 98. That would produce that red candle. But we also could have had this path. Still opened at 100, had the same high, had the same low and the same close, and it gives us exactly the same candle, even though it was a very different stock path. We could have gotten this. This green path would give us exactly the same candle. Why? Because the only thing that matters are the open, high, low, close for the day. That's all that candle shows you. Now, the part where a lot of traders get confused is when they see maybe a green candle and they say, oh, the market was up, and then they look on CNBC and CNBC saying the market was down, or vice versa, and they go, well, how come I've got a green candle, or how come I've got a red candle? It seems to be going opposite of what they're saying, and that can happen, and this is why. Let's say that we have these candles. This is today's candle in red. This is yesterday's candle in green. Notice that we got a gap up. And so if we look at this, we see that here's the open and close for the red candle. Okay, so we see that the candle is red because the close is below the open. That's all it tells us. But what's CNBC going to report? CNBC is going to report that the market was up today. And again, this is where traders get confused. They go, how come the market's up and I got a red candle? Well, remember the way that CNBC reports it, as do most financial sources, is that it's called the close to close. So for the green candle, that's our close. And notice if we compare close to close, in other words, yesterday's close to today's close, the market was up. See, that's what can happen on a gap. We ended up trading lower, but the markets are going to say, oh, well, the Dow was up or the S&P was up. So that can cause a little bit of confusion. Just because you see a red candle does not necessarily mean that the market was down. It just means that today's closing price was below the open. We could also get this. Here's yesterday's candle in red, today's candle in green. Here's our close and our open for the green candle. And if we look at this candle is green because the close is above the open. But look if we compare close to close. Where did yesterday's candle close? It's a red candle, so we know the bottom is the close. So if we compare close to close, we see that the market is down. So CNBC is going to say, yeah, the market was down today, and you're going to be scratching your head going, but wait a minute, it's a green candle. You see the difference there. The difference is that the candles compare today's open to today's close, whereas the financial markets usually report yesterday's close to today's close. Now, the reason that we do that, the close to close is really the better metric. Otherwise, here's a simple example. Let's say that we got this over a 6-day period. Would it be better to say, hey, the market was up 5 straight days in a row because we got 5 green candles? You'd be going, wait a minute, my call option's way out of the money. The markets are way down. How come you're saying the markets are up? See, that's why you don't want to look at just today's open compared to today's close. But the candlesticks do that, and they do that for a very good reason once we start looking at candlestick formations. And those are things, again, that we're going to talk about in the future. I'm looking forward to it. I love candlesticks, and I'm looking forward to sharing that with you. But always remember, your performance depends on your knowledge. This is really more of a knowledge game. It's not so much about what you want to happen, but what you have in front of you. And what's the best course of action based on what you have. It's really all you have to work with. And if you don't understand all of the ins and outs or things that you should know for options, this is where we'd like to invite you to have a free one-on-one consultation with one of our world-class coaches. You get a free 30-minute one-on-one consultation. Phone number there is 888-809-8058. Give them a call. Be able to talk to Stu or Elliot, Scotty, any number of our excellent world-class coaches. Many of them have had decades of trading experience on the trading floors, and they can absolutely teach you things you've never heard of before. So it's just something to think about. If you really want to advance your skills, that's a really good place to start. So I hope that helps for today. And again, we'll look for some more candlestick formations and candlestick stories for the future. I'm looking forward to it. And I will see you tomorrow for Trading Tune-Up, 4 p.m. Eastern.